partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron.
Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. Shawn Hackett is actually, this is what, maybe the second or third time we've done this together?
I think so.
Yeah, so not very often do I get to have Shawn in the same place I'm at, but fortunate to have him here in Denver at a meeting I'm at, and he's nice enough to come on and talk about what's happening in the marketplace. So Shawn, how you doing, man?
I'm doing really, really good.
Good, man. Good travel in? No
Travel
problem?
was good. Got in with despite all the snow and delays and cancellations. My flight was good. So, and tomorrow's going to clear out, which is even better, so I can get home.
Yeah, that's even better. That's the best part of traveling, going
Exactly.
home. Right? All right. So, Shawn, man, there's a lot of stuff going on, and you're gonna speak to my group tomorrow. We're gonna talk about some stuff, and I think probably a good topic for us to spend a little time on today. And we've kind of talked about it a little bit in the past, but here we are, the tensions that we see with China right now, and this is something I've been thinking about for a while. The tension we've seen with China. You brought it up when we were talking about this, that there could be a day that China says, you know what, we're not going to get any more. You're going to be our absolute last point of resort. We're only going to come to you if we absolutely need you, so on and so forth. And if that turns off, you said 2 billion bushels. And oddly enough, the amount of biodiesel that we need to create to cover that, to really self-sustain the United States is about 2 billion bushels. So looking at that, Shawn, and where we're at right now, that scenario is, there's probably a better chance of it playing out than not playing out.
Yeah, I mean, I think it's fairly certain to me that at some point we're just going to stop trading grains with China the way that's going. They're now getting friendly with Russia and Iran, and it's just, so I think maybe the government's actually thinking ahead, but when you really think this through, if they stop buying the 2 billion bushels of soybeans, or we lose most of that business, what do we do? We have to, and so we're in the mode of getting away from fossil fuel, getting away from hydrocarbons. What better way to create a good, vibrant domestic ag market than to say, hey, let's develop all this renewable diesel out of bean oil that we grow domestically, keep all the money here, create, and cash basis, cash bids in a domestic market is much more powerful than when you got to send it overseas and reliable. So everybody wins. The processors are making money, people are hiring people. I mean, it's a strong economic unit. And I think ultimately the EIA came out last month and said that if all the current expectations of plant construction play out, that we're going to produce 2.9 billion gallons more of renewable diesel than we currently do today. Mm-hmm. If you translate that to how many bushels of soybeans we would need to make that, it's about 1.5 bushels per gallon. So you'll figure that it's about 2 billion bushels of soybeans we would need. That's 44 million acres at 50 bushel to the acre.
Okay.
So if our exports stayed at 2 billion, we would need to plant 44 million more more acres of soybeans, which of course we're not going to do.
Right.
If we cut that in half, if we got our exports cut in half, it's 22. If we cut it in half again, it's 10, which is still, all these are very, very big numbers. Right. So my expectation is that it's going to be some common. I mean, we don't only sell to China. We sell soybeans to others. So My feeling is that maybe that 2 billion bushels of exports maybe falls to something like 500 million bushels to a billion.
Mhm.
And then we want to find a way to get an extra 10 to 15 million acres planted in soybeans. And then we let China and Brazil trade amongst each other.
Right.
It's kind of, and we become the largest exporter of bean meal in the world. I mean, we just dominate because we're going to produce all this bean meal resulting from all this crushing for bean oil. And if we certainly won't need it all domestically. So we're simply going to transfer one export to another. Now, remember, China does not buy bean meal. They buy the raw soybeans, but others do buy bean meal.
Right.
So the big thing is what does Argentina do? Because if they get cut out of the deal and that's their gravy train,
That's their big deal. Yeah.
there's the plumbing is going to really get, it's got big transition and it's not going to go smoothly. There's going to be holes in the food chain of how this all works out, which means, guess what? Price volatility.
Yeah. And that's the key to making money.
That's key making money and
also lose money too.
And lose money too. But what I mean is it's an additional dynamic to the climate that we've been talking about that's going to add surprises.
Mhm.
So just as an example, so everything that I'm hearing is that we're going to plant more corn as it stands today, and we're going to keep soybeans about flat. Well, that doesn't really fit in with what we need to do. I just think something is going to happen there. The market has to figure this out pretty quick because it can't wait too long to get those extra acres in,
Right. Yeah.
So,
All right. So in the big picture scheme, and you're looking at the overarching thing. So areas like where I live out in Panhandle, Nebraska, eastern Colorado, eastern Wyoming, you start really looking at some of these areas, eastern Montana. I mean, you're kind of getting north there, but you start looking at some places where elevation starts to play a role in the production of soybeans. Now, not that I can't grow soybeans out here, because I certainly can, but I'm not going to get the 80, 90 bushel, 70 bushel stuff. It's going to be doing that 40-ish bushel range, That's going to change the crop landscape quite a bit across the United States. And you start looking at acres like cotton, you start looking at wheat, you start looking at corn.
Just to the extent that there's grazing ground that can be converted. I don't know how much. I haven't done the research on how much of that could be used or would be. But I mean, there's some of it.
Yeah.
And then you say, okay, I lose alfalfa hay ground, pasture ground to soybeans, and that means less for my cows to feed on. There's a lot of And the other thing that I think the government might be thinking about is whether we agree with it or not, we're moving away from the gasoline engine.
Right.
To something else. Right now it's electric cars. Maybe it's going to be something hydrogen fuel cells, whatever it is.
Mm-hmm.
But the demand for gasoline over time is going to decline, which means the demand for ethanol is going to decline.
Right.
And
the corn acres,
5 to 5.5 billion bushels of corn, if you take away the DDGs, let's say the 3 billion bushels of corn net takeaway that we put into the ethanol deal, if that were to go away, then we have a heck of a lot more acres of corn planted than we need.
Right.
So maybe the government is thinking ahead. I don't know, but maybe they're thinking we have some of that corn that can go over to soybeans and re-establish the balance of power if we're going to continue to go away from gasoline run engines.
Yeah. So let's talk about this a little bit. So right now, cattle herds at all-time lows, as low as it's been since 1960 something. You're looking at calf prices out that you're contracting at almost $2 a pound. I mean, you're really looking at some really heavy. There's not a lot of motivation there to build the herd up when you can take a heifer to the market and get more for it than you would if you just kept it around.
Well, the only way it's going to start making sense is you got to get the feed price down. Like what happened in 13-14 after the 2012 drought when we crashed the price and it came back, lost half its value. You need to get the feed price down. You need to get it to where it's extremely profitable to retain the animals, fatten them up and reproduce them and get that 2-year cycle going again. We're not there yet. We're just not there yet. So one of the things we talk about tomorrow is obviously, the El Nino provides the weather pattern for cool, wet, big crops,
right.
Lower prices. And there's a great debate on whether that will be this year or next year. And we'll go over the various scenarios. But I mean, certainly we feel by 24 for sure, we're going to finally get the big crop in the US,
right.
A temporary reprieve. And that's when, the cattle price can really, really do something wild. And we get those numbers back up again. But until then, you're right. There's really very little incentive to do anything but just, put some equity back after a really rough time with COVID and all the fires they had.
Oh, yeah.
It was really, I mean, they just need to put some money back in the business right now.
Right.
Yeah.
So, I mean, I guess as you're looking at this, Shawn, and you're kind of feeling through all this stuff. I mean, the cattle market looks like it's positioned itself, like you said, for at least 2 years now to see some really good opportunities to build equity. Past that 2-year period, as you start looking at if this whole biodiesel thing takes off, and we start taking out more corn acres and more feed style crops out, does that really help the overall feed?
Well, if you think this through, you could have a scenario where in year 3, the cattle herd really starts to go. And we need all this we need all this corn feed now. We need all this grazing ground. Oh, I'm sorry, we took 10 million acres out.
Right.
Well, that's a problem because now the feed price goes up. We don't have enough, and that's not a good situation. So, we'll have to see how it all plays out. Obviously the only reason why renewable diesel pencils out is because the government is subsidizing it heavily. If it was left under normal economics, the way it stands today, it's a losing proposition. So they have to stay behind it. I'm not very good at predicting what the government's going to do next, but the big risk is Biden or his administration or the Democrats or somebody new gets in that's not them, and they say we don't want to continue. We're pulling the plug on this. Then it's a whole, so it's one of those, ethanol, they just kept it going. They kept it on. I kind of feel once we go down the path far enough, there's too much money involved. There's too much big money at risk that they turning back would be not in the political best interest. So I think if we can get to 25 and get that build out, it's going to be pretty hard to reverse that. I think the government will have to stay behind it and keep it going. Maybe ease back, a little bit, but I don't think they can walk away from it at that point. It's too late at that point.
Right. Okay. All right. Let's talk about some of the weather stuff that you've had on and some of your reports and stuff. We're seeing this big winter storm move through here, and you did talk about having a shorter, more intense winter, and we've definitely had that. And I mean, so looking at that, Shawn, going into spring, what are your thoughts about spring planning, and how do you see that playing out?
Well, we certainly, the moisture this winter has been considerably better in most areas than it's been the last couple of years. So we're going to have the moisture in the ground that we haven't had to get off to a good start if we can get the temperatures warm enough so that we get that 45 degrees or higher. I think we're going to see that. I think we're going to see in early spring, get those good warm late March, early April temperatures, get out of the gate fast and get a good planting pace going, and with wet ground, it's gonna come out. So that's going to be bearish for the market heading into that mid-April timeframe. And then the question will be, at that point, the two signposts that we're watching are the models correct that El Nino is going to arrive by the spring, early summer? Or does the El Nino kind of backing off? Is it delaying? Is it not advancing the way that the current models are suggesting? Because that has a lot to do with whether drought comes back this year or whether this is the El Nino year and we get the big crops and we get the lower prices and the cattle guys say, let's go rebuild. Our work has said, we went back to 1850 and looked at all the metrics and looked at all multi-year La Ninas that transition to El Nino, and only one time have we been able to develop an El Nino by July, one time out of 14 times. It doesn't mean it can't happen, but it means the probabilities are not good. The probability suggests that the models are being too aggressive. And by the way, it's well known that models have a very high degree of error in predicting El Nino La Nina prior to the springtime.
Right.
So I would really be very, very cautious in overplaying the models right now. We think by the time we get to April and May, it'll be clear that yes, La Nina is gone and it's gone, but we're going to be more of a neutral state. And in a neutral state, we can have drought come back, especially at a time that the 89-year Gleisberg cycle is expected to repeat or to return over the next 3 years. So there's a lot going on. And, obviously as time goes on, we'll be able to firm up and get a little more clarity and get a little more confidence in exactly how this is going to play out. But our best case scenario is later in the year, El Nino, drought risks elevated. And if that's the case, then the herd rebuilding phase that we've just talked about with cattle will have to wait until 2024.
Gotcha. Okay. All right. Last topic here, and then we'll close it down. Shawn, as you take a look at world grain supplies and what we see there, this is the second year in a row, if not third year in a row, where we've consumed more than we've produced, and obviously, world ending stocks, should reflect that. I guess, in your opinion, like how many more cycles like this can we have before we just see total anarchy in some of these third world countries?
Well, we've drawn down global global grain ending stocks have declined 6 years in a row.
Right.
And so we're really at the. I mean, we've talked about this before, but the one thing that's kept the system just barely together has been the fact that we've had enough rice to feed the world. India's been able and willing to sell a lot of rice for, and even though the wheat price got carried away, the rice market kept the starving people from starving. So how much longer could we go? I don't think we could go. So I guess where I'm at with this is that if we have another year, if the US were to get into trouble and we have a Glasberg cycle, which means there's no way we could have an increase in ending stocks in the next crop cycle, if that were to occur, I think that's the breaking point. I don't think we could have another run down in grain inventories because we're already razor thin, and the rice situation is starting. The rice price has been rising now for 6 straight months. So I really think, I deeply, deeply hope that the Glasberg cycle waits until like 25, because for humanity purposes, it would really help to kind of get a little breathing room before we go back into the fire than to just put lighter fluid on it right now. It's not up to me to do that. God's in charge and he'll decide. But, that's in my view, we're 1 year away, one bad crop cycle away from some very, very ugly geopolitical, civil unrest and unpleasantries.
And what we've seen so far already has been, if you take a look at some of the African countries, like we talked about this before, looking at some of the African countries, there's 62 African countries or whatever there are, 54, I think 54 African countries. And something like 80% of those have had some level of a coup attempt.
Well, even in West Africa, which is one of the more affluent areas of Africa, where they grow a lot of cocoa, in Ghana, they're rioting in the streets. I mean, it's getting out of control because their inflation is running over them, and they don't have that. Nigeria is going through another.
Sure.
It's really a mess, and that's where it starts, because Africa is always where it starts, and then the dominoes fall from there.
Yeah.
And the Middle East is next, and then then you go. So yeah, I think we're seeing the early signs of what this might look like, but it would certainly spread far and wide, much further than this if we had another crop problem overall.
Okay.
So,
well, Shawn, good stuff as usual, man. Folks want to reach out to you and get more information about what it is you're doing. How do they do that?
our website is Hackett, HACKETT advisors.com. Our Twitter page is at FERIDEX11. And we also have a LinkedIn page, which you could search Shawn Hackett or Hackett Financial Advisors. Will pop up. From time to time, we share some of our interviews, some of our cycles, to keep people up to date. Obviously, we do the same thing on our website.
Yep. Right on. Well, Shawn, I appreciate you being on the podcast. It's always fun to have you.
Always glad to be here face to face.
It's always fun. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast. Check out the video version of this podcast at the YouTube channel Moving Iron Podcast, and go to Moving Iron LLC for everything Moving Iron related. Take advantage of that $50 discount from Axon if you're one of the first 150 people to sign up for the Moving Iron Summit coming up here in September 11th through the 13th down in Nashville. So if you're interested in doing that or need more information about that, send me an email at MovingIronPodcast at MovingIronPodcast.com, and I'll make sure to get back to you as soon as I can. So with that, I'm Casey Seymour with Shawn Hackett. It's going to be smart, folks. Out.
Moving iron in the 21st century. Hard work.